Friends, in this video for I Thought Wealth, I am going to talk to you on the topic investing in global stocks. When we look at the best of Indian companies, the blue chips we love to own, what is the first thing that comes to mind? The first thing that comes to our mind is the valuations are too expensive and we are taught not to buy at any price. So what's the alternative? That's the quest in all of us, right? When you can't do something, you try to see, can I do something else? It is that search, that hunger to find something else that made me look at the blue chip companies in the US markets and in the global markets. As I began to track them, I found that progressively those companies were becoming cheaper. They were getting affected more with every global financial event. With every interest rate hike in the US, the valuation of these blue chip companies were softening at a faster rate than the best of Indian companies. In fact, the best of Indian companies have not even had a cut in valuations. What they have seen is a very marginal, sobering cut in valuations. Whereas the best of global companies, the tech companies, the brand franchises, the cut has been sharp. So this comparison is making me more and more aware of the widening gap in valuation between Indian blue chips and global blue chips. I am more and more inclined to think that I should participate in global blue chips in 2023. I am going to name a few of these companies for tracking purposes and for you to understand, to reference and go and see how the valuation has behaved in the last 1 year, so that we see how cheap these companies have become. In the case of some companies, some brand franchises, the valuations have also gone up. Let's first look at the ones that have lost valuation, because that's where we could have some potential opportunities to invest. Amazon, Apple are two companies where the stock is becoming cheaper and cheaper. You also have Google, or Alphabet as we refer to it, where the stock is becoming progressively cheaper and more attractive. And these are companies which are the bluest of blue chips in the world. These are companies that are all around us, they are in our lives, they are in our hands, we use them all the time. They deliver to us, we live through them, and yet we are not seeing the relative attractiveness of these businesses. That seems a little bit too stark to me, especially with these three companies. Move a little bit to another set of companies which are looking a bit iffy right now. The first one is Facebook. The second one is Nvidia. And the third one is TSMC. These are three companies which again have a big role in our lives, and yet we are not sure whether they will do well into the future. Probably we need more evidence, probably we need more news flows, probably we just need better sentiment, but we certainly need to look closer. So as we begin 2023, I am inclined to believe that I would rather spend my time studying these companies closely, understanding them better, putting monies from time to time, than going and buying an Asian Paints or a Pidilite or a Bajaj Finance or any other super expensive company. These companies have shown again and again that they invest for the future when the markets are down, and when the markets are up, the markets are going to disproportionately reward them. And the way they create optionalities and leadership in their space is unparalleled in our investing history. So it's a time to learn more about global stocks. You could have your own list. I just gave a small list of companies which I like to see. And I'm open to adding more companies. I'm looking at a lot of industrial companies in Europe and US. But this learning is very critical for us so that we create a world view in our investing and grow out of this narrow set of ideas and thought processes. 2023 is that year when we should do this successfully. Thank you for watching this video.